This is your monthly update for March 2017. The markets in the month of March domestically were basically flat. The S&P was up 12 basis points and bonds were down like 5 basis points, so almost exactly flat. Globally, things did much better, led by international equities in Europe and emerging markets, which did very well. So global markets were much healthier than they were domestically. So not really a lot to talk about in the market. The Fed did raise rates during March, like we talked about last month. And we got their minutes from the Fed meeting yesterday, which we'll talk about. Probably the most important development from the month of March was the Trump healthcare bill, which failed to pass through the House and Senate. This is important for two reasons. One, because the market's taken off since he was elected, and that's been predominantly based on hope that he will get his tax bill passed. And a lot of these things that he would going to do were very stimulative to the economy, so the market's priced in a lot of good things happening. And the fact that the healthcare bill didn't go through is probably going to be important as we move forward, because it's kind of the first chink in the armor as far as and all of his policies are going to be able to get passed. The market kind of shrugged this one off, that didn't really do anything. But if something similar happens with the tax bill or things of that nature, we could start to see some volatility in the markets, because those have already been priced in, like they've already happened. And the FOMC minutes came out yesterday, and they kind of echo the same sentiment. And I'm going to read a quote from it. It says, "Many participants discussed the implications of the rise in equity prices over the past few months, with several of them citing it as contributing to an easing of financial conditions. A few participants attributed the recent equity price appreciation to expectations for corporate tax cuts or to increased risk tolerance amongst investors, rather than expectations of stronger economic growth." And they go on to say that their policies going forward about raising rates and stimulus could be impacted by a stock market pullback, in that the stock market has already priced in these tax cuts. So the Fed's even watching this, which is very important. So we're expecting this to be a very important thing going forward that we're monitoring. But as we said before, March was just kind of a ho-hum for the markets, and we'll continue to watch it as we go forward.